So let's look at the dollar index. Oftentimes we talk of DXY, DSY, DSY. So some people might ask, what exactly is a DSY? What is dollar index? If you are a trader, you need to be conversant with, anytime you come into the chart, the first thing you want to look at is the position of the index in the market. The highs, the lows, the close of the week, the opening of the week, the highs of the month, and the close of the month, especially the previous data. So these are informations that you need in order to navigate in the financial market. The DSY is a measure of the value of United States dollar relative to basket of 6 major foreign currencies. It was originally developed by US Federal Reserve in 1973. And it's now maintained and published by ICE, International Exchange Incorporated. So the index increases when the US dollar strengthens against other currencies and decreases when it weakens. So the 6 currencies in the basket are mainly euro, Japanese yen, pound sterling, Canadian dollar, Swiss krona, and Swedish krona, Swiss franc, sorry, and Swedish krona. So it's important that every time we have a very strong fundamental data print coming in from United States, you come back to the DXY chart and see what the market is doing. Don't trade blindly. Trading is education. Let me be very honest with you. If you want to be a successful trader, you must be a trader that reads. You have no reason as a trader always being in the club. You have no reason to always be in the club. You all prepare ahead of time. If you want to trade tomorrow, you need to be reading today. You need to be studying today. You need to be looking at central bank decision today. You need to be looking at monetary policy changes across border, from the base currency to the quote currency. You need to see what their central banks are doing. You need to look at the bond price. You need to look at the bond yield. You need to look at economic outlook. You need to look at fundamental data. These are whole compared data which you need for you to trade. So let's go straight to the point. So when you look here on 4 hours, we have a descending structure way back, and after that we had a break of structure, possible retest, and more bearish drop, and we had another level of support that was tested for a while, and after that broke, that formed the structure which we have now, and that gave us a descending trend line, DTL. Gave me a descending trend line, DTL. And that descending trend line has maintained the same trend angle. All I did was just to clone it. That is what tells you how unique trading is. Trading is a logical probability. You see, it is the same trend angle here. The same trend on the same trend angle I brought here, it gave me the same. I also brought here too, the same thing. You see it? So it was this strategy that has given us a buy on a dollar index on this floor. Dollar found support on this floor based on this structure we had here as SR level 1, SR level 2, sorry, RS1, RS2, RS3, RS4, break of 4 RS level. We have 4 RS level on a descending trend line. Break of that structure price came here on retest. After all the play, it finally came back and we have bought. And the price by close of Thursday attended to the supply roof and was also respected, and we are seeing it going down. Now let's go straight to the business. Now is when the trade gets technical. Now let's look at it. Where are we likely to wait to buy again? This is where it gets a little bit technical. So let's look at the structure and see what happens. So now I'm going to also explain what I've done so that I'll put it into clarity to everyone. And this is for educational purpose, ladies and gentlemen. We want to see if market reacts here or not. Because that is why I never delete any of my charts. I let them run whether they come or not. So they are for educational purpose. But I know it's valid. So you have here two support structure. In fact, it's not two, three support structure. Another support structure, 4. So I'm also going to put that up. We have here SR1, support become resistance and break of structure. SR2, support become resistance and break of structure. SR3, support become resistance and break of structure. SR4, support become resistance and break of structure. So that makes here HTL. HTL means horizontal trend line. Remember, I told you before, I'm a market structure specialist. Now we have break of 4 SRO level, SR1, SR2, SR3, SR4. Break of that structure. When price came here, what did he do? Retest. So we are going to call that RT/RS. Resistance becomes support and break of structure and a retest of a broken structure. Remember, we broke out from a demand floor and came back to retest it. That is why you have it as what? RT/RS. And price came again and formed another RT/RS. So on that very price action, we had two RT/RS, first one and the second one after the breakout. These are two free trades. In these two price action here, in these two sell price action, AUDUSD, go back and check, it's a buy. GBPUSD is a buy. USDCAD is a sell. On these two price action, on this rejection, on this retest to a broken demand floor, retest 1, retest 2, RT/RS1, RT/RS2, go and check it. Go and check XAUUSD. XAUUSD on this rejection is a buy. The reason is because this is not just an ordinary price action. This is a price action that have already built itself up and tell you what it's about to do. The market started by building first RS1, RS2, RS3, RS4, break of 4 RS level, and price came back, retested twice before break of that resistance level, bringing price here on demand. So on technical, this is your demand floor. Trading is 100% probability. And if you treat trading as probability, you stop chasing the market. And the moment you stop chasing the market, your breakthrough has come. There are going to be weeks, there are going to be days, you are going to win back to back. You are going to win back to back, back to back. If you understand it as probability, the days when you lose, you let it be. Just let it be. Because you are dealing with probability. So now, if price comes back there, that is going to be my demand floor. So I give out classic market structure contents that I'm not paid for. I don't make any money from anybody, and nobody pays me anything. So that is why I stopped posting anything about any currency pairs, and I will never post again because I don't get paid. I'm doing it for free. I'm doing it for reference. So at this point, I have nothing to prove. So there is no need of me posting free trades every day. But in order to keep the community alive and keep the page alive, I randomly want to post things, but I'm not posting anything related to gold, copper, silver. No. But I'm free to talk about bonds. So henceforth, I want to start talking about bonds, yield. These are things that we focus more on the education. So what we want to see is that now we've been rejected on the roof, and let us also acknowledge we have an ascending trend line here and awaiting ascending trend line breakout. If that happens, then most likely you might get another touch and price will come down here, and we might form a W structure, and we break this structure finally and we move. Another case scenario is a potential pullback that price will get here and form an M structure and continue to sell down. So if that happens, then that justifies our descending trend line that dollar is still tanking. So that's all we have for now. And I wish you a very good week. As you start the week, start strong, believe in yourself, Every strategy works, but it's not everybody that is patient. Patience is the biggest strategy you need as a trader. Be patient, believe in the process. I want to see you at the top. I want to personally see you at the top. Okay? There is no gain seeing any young man at the bottom. I want to see every young man at the top.